Oh, okay. I think we'll just start like this and um we'll every other person that is joining will just meet up with whatever we are talking about. So good evening once again everybody. My name is Niyi, one of your co-hosts for this seminar. And the last meeting we had, that was Dammy that did the introduction, my other co-host, while Mr. Timzil, our boss, he was the one that took us for that amazing class. I really enjoyed the class, and if you also enjoyed the class as me, I want to see her in the comment section. That was a really educating class, to be honest. Thank you, Mr. Timzil. I need to see her in the comment section. Yeah, yeah. Thank you guys. Thank you guys. Thank you guys. Yeah. It was an amazing class, and trust me, you are not ready. You guys are not ready for the next class that will be coming next. So we have Mr. Motola who will be taking us for the next session, and I would like to introduce him in right now. So Mr. Motola, you have the floor.
All right. Good evening, everybody. I believe everybody can hear me. You can hear me.
Yes, 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 I can hear you. Perfect.
All right. Okay. So I'm recording already. So like I was good evening. Like I said, I'm Omotola Oladipo. But people that are close to me, they call me Stileyi. You don't need to ask for. Sorry, I need to add in some. Yeah, you don't need to ask for the meaning of Stule. Just I'm Stule. I'm just Stule. All right. So sorry, I'm trying to add in people. All right. Okay, I believe we've been learning during the course of the summit. Like everybody has been learning and kudos to Dammy, Larry, and Lee for hosting us. I believe it's a great thing that we have here. And like if you utilize this very well, I believe it would change the trajectory of your finances in a couple of of weeks if you truly utilize what you have been learning. I Timsy spoke about fundamental analysis. Was this fundamental analysis? I believe someone has spoken about fundamental analysis. Was it iSense or I think iSense and Timsy as well? I heard them talk about fundamental analysis. Actually, what I'll be teaching you guys today is technical analysis tonight rather technical analysis technical analysis. So what is technical analysis? I believe we are with our writing materials and notes and pen. Technical analysis. So what is technical analysis? I would say technical analysis. It's also type of analysis, or let me say it's a methodology. Let me put it that way. Technical analysis is a methodology for analyzing the direction of markets or price through the study of past market data. Sorry, I need to admit some people. Yeah, through the study of past market data. So Forex, like Danny, was it Danny or Lee? I think both of them they explained in the first class when they spoke about um financial markets. Financial markets. So Forex is part of financial markets. Financial markets is anything that uses any market that involves money, any market that involves money, right? Any market that makes use of charts, CHART of charts. So any market that makes use of a chart is a type of financial market. That's where we have forex, we have crypto, we have stock, we have commodities, we have bonds, right? Right. So technical analysis is a type of analysis. We actually have three types of analysis. I believe we've already gone through. a type of analysis, which is fundamental analysis. We have three types: fundamental analysis, that's one; two, technical analysis; and three is mental analysis. So the mental analysis is actually the psychological part of financial markets. So I believe everybody can hear me. If you can hear me, kindly, like Dammy started, kindly say I in the chat box. Can you say I, please? Let me see if you are following. All right. Okay. Yeah, I can see your highs. All right. All right. All right. Okay. So I said we have three types of analysis here. We have fundamental analysis, we have technical analysis, and we have mental analysis. But what I will major on tonight is technical analysis. A couple of 40, 30, thereabout 40 minutes thereabout. So I will talk about technical analysis. So like I said, technical analysis, people use fundamental analysis in the 80s. That was the first thing they used to know. I don't want to use the word predict or the word forecast. That I think that yes, it's kind of somewhat like you're predicting, but I don't want to use that word because most these sporty bet people they tend to um think we are trying to also predict. But if you know your onions very well, that is if you know your if you're technical and if you are very vast in your technical analysis game, I believe you should be able to know your market movements. And that's the reason why we learn about technical analysis. We learn about technical analysis to be able to know the movements of markets, like what market is doing per time. So, like I defined technical analysis, I said it is a methodology for analyzing the direction. So, it's not like you are trying to predict or forecast, like they say. You're actually trying to analyze the direction of price. So, it is about analyzing the direction of the price. Are you getting my points? Because markets, it's either market is buying or selling. You should put that at the back of your mind. It's either market is buying or selling. You go to market, since it's a financial market. So that word market, let it be hanging somewhere in your mind. It's a market, yeah. So since it's a market, you have to what? It's either you go to market to buy or to sell. You can't just go to market to play. I believe it's someone who does not have anything to do that goes to market to just go and watch, right? So you go to market to either buy or sell. So, like I said again, I said technical analysis is it's you analyzing the direction of price through the study of past market data, right? Now, I've already spoken about fundamental analysis, whereby it was like the first thing they used in the 80s, like those people that started forex trading and stock, etc., like financial marketers, basically. So they were using fundamental. Yeah, people still use fundamental analysis to know because whereby I sense spoke about. Let me admit to Michelle. I sense spoke about fundamental analysis. Right? I think that was yesterday, whereby he mentioned about various things that affect the market, like CPIs, economical news, national policies, right? Whereby they affect the financial markets. So I already spoken about the three types of markets, right? Fundamental analysis. I mean, three types of analysis rather: fundamental analysis, technical analysis, and mental analysis. Actually, forex is about 100% mental and 100% technical, right? So like I don't trade fundamental, right? I don't trade fundamental. Actually, I've never for once traded fundamental in my life. And if you know your technical analysis very well, you can, even without trading, you can actually earn money. You can just be a technical analyst. Technical analyst. I'm actually a technical analyst. I work for different, like people to analyze, like different things. Like people get to pay me. Like I work for different companies as a technical analyst. All right. So let me just dive into technical analysis again, like to tell you what to expect. We've already spoken about bullish market. I think that was what Tim Zhu spoke about in earlier class, right? He spoke about the movements of markets. So in a financial market, we have let me show you the types of trends we have. Types of trend. We have one, uptrend. We have two, we have downtrend. These are the major types of trends that we have. Like the uptrend also is known as the the bullish markets, right? The bullish markets, or when they say market is longing, 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 or and the downtrend is bearish, right? Bearish, bearish, shorting, shorting. So since it's a short, it's just for basics, right? So I will just try to give you the surface of these things. So actually I'll be teaching you market structure. Like this is technical analysis, right? So I'll be teaching you the structure of the market, like what to see in the market. How, I told you that we have two major types of trends in markets, right? The uptrend and downtrend. So in an uptrend, I heard where Tinsley was teaching, he was teaching about a bullish market, right? Whereby it's a series of higher highs and higher lows, higher highs and higher lows. So I would just teach you why we have why and how we can determine if market is actually uptrend. Yes, looking at the structure, we can see that market is just going up, right? Like it's moving up, just like the direction here. Like, but in your charts, you wouldn't see this direction here. We don't see this direction here, like market is going up here. No. But why, how would like know if market is actually buying, and how would you know if market is selling? I think that's the basic question that people get to ask. Like, how would you know if market is going up, and how would you know if it's selling, if it's coming down, right? So now, this is higher high, higher low, higher high, higher low, higher high, right? Okay, sorry, let me just mm, higher high, higher high, higher high, higher low, higher low, higher high again, higher high again, then higher low. Sorry, don't mind my writing, no, I beg. So higher high, can you see my screen, please? I hope you are following. Higher high, higher low. Please, are you following? If you are following, just drop, like high again, please. Let me see your highs. Someone said I would love to be a technical analyst. Yeah, it's a nice thing. A nice thing. Oh, someone said I should come again. Icon. Like, can you just type where you said I should, like recapitulate? Just reiterate myself. Can you tell me where to come again? I think you said I should come again. Come again. Yeah, can you just tell me where to reiterate myself, please? It said, but come again, higher lows. Okay. Yes, I'm still explaining. Just pay attention. If you pay attention, I think you get the major thing I'm talking about here. I said, how do you determine if market is going up and if market is coming down? If market is coming down. So this is, like a series of like things he said, earlier. He said bullish markets are formed with series of higher highs, higher lows, higher highs, higher lows, higher highs. So how do you know if market is going up? Actually, the higher high here is actually a weak high. Now markets tend to push up because what? The high here is weak and the low here is strong. Let me explain again. Let me explain again. Let me explain again. So markets tend to push up because what? This high is weak. So that is the major reason why market is going up. Market is going up because what? This case is weak. So that is why markets could raid or break this high. Are you getting it? Now let me give you like a layman, like um terminology. Just like proper fraction and improper fraction. Don't let me use that. I believe not everybody knows maths. Okay, let me just use our normal, normal um thing, like normal thing we see in our surrounding. Like you can't expect a car to carry a lorry, right? Can't expect a car to carry a lorry. Like definitely, the the car is kind of weak in terms of strength, right? In terms of like strength, like weight. Let me use the word weight. In terms of weight, so the weight of the car is low compared to the lorry. So which one will come up? So the car which is weak would come up, right? The lorry would be what? Would be down, which is strong. So the one that is weak, which one is weak? Which one is weak? The car, right? And the lorry, which is strong, will be down. And the one which is weak is the car which will come up. So now this is weak. This higher eye, the higher eyes are weak in an uptrend. Please take notes. You can write it down. The higher eyes, higher eye. The higher eyes are weak. So what we're expecting market to do is that should break market should break the higher highs because what they are weak. So markets will now create a strong low, a strong low. So this is a strong low, a strong low, strong low, a strong low. So this is a strong low, and this is a weak high, a weak high. So market, you are not expecting markets what to break this low anytime soon. Please don't just calm down. Anytime soon, you are not expecting markets to break this low anytime soon in an uptrend. In an uptrend. So what you're expecting market to do again is what move from a major like liquidity here, a major liquidity here to what to break this high again, to break this high again, to break this high again. Because what it is weak, because the high is weak. So what we're expecting market to do is what break the high again because what it is weak. So in an uptrend, the highs are weak and the lows are strong. I think that's better. Is that better? If you are following, just drop I in the charts, please. If you are following, kindly drop I. Okay, someone said, how can we? So when you mentioned types of analysis, oh, where I mentioned types of analysis. What if it's mistakenly? What is this? What if it's like raise the higher low, right? Okay. All right. Now, like I said anytime soon. Like if market now comes to this, to this breaks this strong low. This low is strong, right? If market now peradventure breaks this low, then market had already what shifted. Are you getting my point? Market had already shifted its trend from that is a potential shift in market structure. Let me use that word potential. Markets had already what shifted the potential. I mean, market had already, like that's a potential market shift. So which whereby markets could now what come back again here and continue the downtrend because market had already shifted. Are you getting my point at all? The markets will do something like that. If perhaps markets, like comes down to our strong low. Now, actually, let me quickly explain this. Let me quickly explain this so that you would. All right. Thank you, laughter. I believe you got that already. So let me quickly explain um this. Yes, I heard where Timzy was explaining like different like time frames that we have, different time frames that we have. We have 24 hour. I mean, it even goes beyond 24 hour. We have weekly, monthly time frame, monthly, weekly, daily. Daily is 24 hour. We have 4 hourly. We have 1 hourly, 30 minutes. 15 minutes, blah blah blah. We have even have 3 seconds, actually 1 second. So we have different types of time frames. So, and market is fractal. I will come back to our trends, uptrend and downtrend. Market is fractal. Please note this. Market is fractal. How do I mean about this? Like the fractality of markets or fractality of markets. Anything happening, anything happening, anything happening in a higher time frame, comma, is happening in a lower time frame. Please put this, write this in capital letters. Market is fractal. That is, anything happening in a higher time frame is happening in a lower time frame. We actually have different types of markets, of structure. We have major structure, we have minor structure. Different types of structure. We have major structure and minor structure. Like the major structures are the types of structures you see in monthly, weekly, daily, 4 hour time frame, depending on the kind of trader that you want to become. Either you want to become a swing trader, a maybe intraday trader, or a scalper. So it depends on the kind of of trader you want to become. So because that kind of trader you want to become would form your basis of analysis, how you get to see markets, how you get to analyze markets. What are the things you see in markets? Do you like trade 4 hour time frames? Do you trade daily time frames? For me, I'm an intraday trader. I trade during the day, during the day. So there are things that I need to see in the market per day before I trade. I have my my bias, my hedge. Do you get? So there are basic things, just like this trade I took today. For me, I don't really trade forex. I trade synthetic. Like I major on synthetic markets, which is derived. Let me show you these types of markets that we have. Can you see this? We have forex, stock, commodities, derived, and cryptocurrencies. So the kind of trader I am, like what I trade usually is derived quantities, which are volatilities and indexes. You get? So those are the things I trade. Like I trade derived. But the concept of technical analysis goes, for everything. So and if you understand technical analysis, if you understand technical analysis, you can use it to trade forex, you know, commodities, stock, cryptocurrencies, and the likes. So your knowledge of technical analysis is actually like the very most important thing. So in the types of analysis I mentioned earlier, fundamental, technical, and mental, I would say that you if you are trying to for me, even if I think I traded forex last week. I traded uh AUD, Australian dollar, and is it AU? Yes, Australian dollar and CAD. Yeah, that was what I traded last last week, and Euro USD. Yes, yes, yes. Those are the two pairs I traded. I traded both pair last week, and what I used basically was my understanding of technical analysis. I did not even, like I didn't bother myself um about fundamental analysis, because one thing you have to know is what news does is that it makes your market to be volatile. volatile. If market is just moving, like just moving, like let's say market it takes like 5 minutes. Let's say now let me give this use this as an instance. Let's say you want market to come, to get to this particular range, to get to this particular range, to get to this particular range. Let's say normally, let's say normally from this, where price is currently at here, let's say it would take about 5 minutes or 10 minutes to get to this level. But what news will do will be like that 5 minutes, that 5 minutes, or 10 minutes, news would make it 30 seconds or 1 minute. Are you getting my point? So just move from. So it's actually like it's giving volatility to markets. What news does is that it will give volatility to markets. Markets will be very, very volatile at that point in time. Markets will just be volatile. That is, markets would just move very, would have a very great volume, like move very sharply. So that's what news does to markets. So basically, your understanding of technical analysis actually goes a very long way in understanding what market is. So like I usually tell my students, my people, that in knowing how to analyze a market, you ask yourself, you ask yourself three basic questions. Three basic questions. Three basic questions. One is, where is market at the moment? Where is market? Sorry, where is market coming from? Where is market coming from? Coming from. Two is, where is market? Where is market at the moment? Three is, where is market going to? Where is market going to? So your ability to answer these three questions, like I'd already, hey, we are running out of time. Oh God, we have 10 more minutes. 10 more minutes. Shit. But are you following? Let me know if you are following this. Kindly drop a chat and drop something in the chat. Let me know if you are following. All right. Okay. Come on. So your ability to answer these three questions, like would form the basis of your, how you analyze, how you get to analyze. So where is market at? Where is market coming from? Where is market at the moment? So now the moment how I took this trade actually was that this was like a 5 hour trade. I asked myself, like where was market at that point that I took this trade? At that point, and I get to like what I trade is, I think I've shown the hosts, the people like the hosts. I think I've shown them before. So I think this is how I trade. I get to, I trade some specific thing, in daily in the market, and I saw what market did already. So now I asked myself, where was market coming from? Market was actually coming from, markets. If you go, okay, let me come in, come in. Let me quickly show you this. Look at this. Look at this. This was a higher low here, right? Markets broke the higher low. Don't forget, I'm in a daily time frame. So it would take a day for one candlestick to form. I believe Team Z or Team Z. I believe Team Z explained that already. That is, it would take one candle to be formed in a day if we are in a daily time frame. In a 4 hour time frame, it would take a single candle to form to form in 4 hours. If we are in a 1 minute time frame, it would take 1 minute for a candle stick to form. So this is a daily time frame. Markets had already broken, like a liquidity here. Like I believe Now, if you really want to take this further, you would text the host to let you know, like know these things. Like market had already broken this low. So I believe that markets had already broken the low, right? So after a break of structure as well. Now look at this. Let me go back to. I'm still coming back, but we have a limited time. Chimo. Okay, come in. Look at this. Look at this. After a break of structure, always expect market to retrace. So after a break of structure, always expect markets to retrace. So I knew that what this is a higher high. So there's something at this top of the high that actually makes market this higher low to break it. Because we said it is weak, right? There's something at the top of at the top of it to make it weak. So the weakness of this is actually as a result of something that is resting above it, and that is a liquidity, something that is resting above it. So it is weak because market, there's something that actually makes it weak. So the higher highs are weak because of something that we are expecting market to raid to break, right? So to break, come in. Let me check if people are okay. So we're expecting market to break the highs because what? Because they are weak, and to these strong lows also could be called protected low, protected low, right? Because they are strong. So you are not expecting markets to come down anytime soon. If markets would continue to maintain the um the trend of markets. Are you getting my point? So that's how you want market to move. That's why Timsy said market, I mean an uptrend moves in a series of higher highs and higher lows. Let me quickly come to downtrend to show you how downtrend is how downtrend is. So now, like Timsy said, he said like the reason why I'm referring you back to what they taught is because I believe everybody joined or participated in the previous classes. So now look at this. Markets, this market moves in a series of lower highs and lower lows, right? This is a low because this is a lower low, a lower high. High because it is the top now. This one is at the bottom, this one at the top, right? So that's why it is lower high and lower low. And the reason why there is lower at the back is because market is coming down. It is selling. That is why we have it as lower high and lower low. The reason why we have this as higher high is because what this one is at the top, this one is at the bottom, right? The reason why we have it as higher high, higher high, higher low, like the reason why we have higher at the back of these highs and lows is because what market is moving upward, because market is going higher and higher. So the reason why we have this as lower high, lower low, lower high, lower low, lower high is because market is coming lower, going lower. So because market is selling, right? So now this like which of these, let me quickly throw this question. Which of these would you think would be weak? Would it be your lower low or your lower high? Can you quickly send the answer? We have 4 more minutes. Quickly send your answer. Will it be lower high or lower low that is weak? Quickly send your answer. Let me check if you are following. Lower low. Thank you so much, laughter. Thank you, thank you, thank you, thank you, icon. Thank you, lower low. So your lower low is weak. That's why markets would always keep breaking it. That's why markets would keep breaking it. And your protected high would be what? Your strong, or this strong high would be what? I mean, this lower high will be your strong high, that's all protected high. That is what you are not expecting market to break anytime soon. Anytime soon. So, like actually, this is the time we have a limited time already, and I'm kind of pained because I've not really touched things I would love to touch. Like it's really painful and like very devastating actually. Like it's painful because I would love to like to take you through like market structure, major I mean types of structures. We have major structure and show you how to check your hey, there are people waiting. Yeah, let me have it. I think then. They are joining at the end of the class. So now, I believe, I believe these are the basic things you need to know in the market, like to know to determine your trend, your trend. Like don't like before. Let's I forget. No, like I said market is fractal. That is, if you go to a, let me show you the fractality of market. This is a this is how I determine my major trend. Let me quickly show you. Let me quickly show you. Let me quickly show you this. Now, looking at this right here, looking at this from year to year, coming up from what you are looking at my screen. What do you think market is doing? Is market going up or coming down? What do you think market is doing? Yeah, is market going up, coming down? Going up. Thank you so much. Thank you so much. Going up. So now market is going up. Sorry, I have 1 more minute. Ah, Che. Chivo. Market is going up, right? So now this shows that what like this was how I traded today, right? Now,
Oh,
what's that? Someone is talking. Who is that?
yeah. Well, Mr. Motola is me.
Me, okay.
Yeah. I think like you can create a new link and quickly drop it so that you can continue with your session without rushing yourself.
Ah, I
So
appreciate. So let me I will hang up now and send another link.
yeah, exactly.
Hope, hope,
Everybody
hope,
should just
yeah, everybody should join. Like, hope you are following this. I will drop my link now. Let me quickly end this.